Good morning, ladies and gentlemen, and welcome to the show. Today is July 22nd, 2019. It's a Monday, and listen, I'm glad to have you guys here. Now, what I want to talk about is, let's take a look at the markets. Let's get them open right here and start the charts. Let's take a look at the silver price today. Silver's doing pretty good. Gold and silver. I think that this is just the beginning of a monster of a bull run in gold and silver, because all the way through history, gold and silver are what supports. It's a fundamental layer underneath the world's financial system. They can expand this paper monetary supply endlessly, and gold and silver's always in the background. It's always there. You got Bitcoin coming along trying to take the place of gold and silver, but gold and silver, it's your core support. Let's take a look now at gold today. 14.28. So it's going up right now. It's up $3.10 on the day. Take another look at silver real quick. Silver 16.34 bid, 16.45 ask, and it's up 16 cents on the day. And it looks like it's shooting up right now in price as we speak. Let's take a look now at cryptocurrencies, and we're looking at $288 billion in market cap for cryptocurrencies. And cryptocurrencies, they kind of like they've stalled a little bit right now. They're not really moving in any particular direction. They're staying in just under $300 billion market cap with a Bitcoin dominance of 65.3%. We see it going along sideways here. Been going along for a little while sideways. Ever since it hit that peak of 13,800 and it fell back, it had a little price correction. Now it's going along sideways, and we're waiting for its next move. I think its next move is going to be to the upside, unless something weird happens, like a recession strikes out of nowhere really quick. Well, we're working toward this recession. We're not there yet. I'm going to talk about that a little bit toward the end of the show here. Let's get on here and move into the Dow Jones Industrial Average today, and I'm going to have to refresh the page here to see where it's moving. We're looking at it's up 36 points on the day. The Dow's been kind of going a little bit sideways, a little bit of upward motion to it, but a lot sideways. Let's take a look at 3 months here, and we see it does have an upward trend, but it's only trending upward very, very slowly. It's not going up fast, but it's moving up. It has been moving up. Let me see. Let's go to the 6-month chart here. Take a look. We can see it went down into this little dip here, 24,819, but ever since then it's been moving up slowly. 27,190. Wow. Is that ever high for the Dow Jones? Let's take a look now at oil prices. Now let's go out over a 3-month chart here, and we can see oil prices have been kind of going sideways, slightly trending downwards. Let's take a look at 6 months. I can get the 6-month chart. There's the 3-month. Take a look at the 1 month. No, it's not moving. These Yahoo charts, they don't work the greatest in the world, but anyway, they get the job done. Let's take a look now at U.S. Treasuries. And what we're seeing today is we're seeing the yields fall on the long end of the curve. All the way out to the 30-year. We're seeing 2.3 basis points on the 30-year. And we got falling yields, except for the shorter end of the yield curve. Not the real short end of the yield curve, but starting on the 3-month and extending out to the 1 year, we got rising yields, but they're only rising marginally, except for the U.S. 3-month, which has had almost a 2 basis point rise in yield. So it's up to 2.08% on the U.S. 3-month. Now let's take a look at the U.S. dollar index today. 97.19 in the U.S. dollar index. The dollar's staying strong. I notice even though the dollar's staying strong, gold and silver prices are creeping upwards. If we see a fall in this dollar, we're going to see gold and silver prices pop. They're going to go up, gold and silver prices. Now, we could actually see a little bit of decline in the dollar if they lower interest rates. Are they going to lower them 25 basis points at the end of July? Or are they going to lower them by 50 basis points? This is a question mark in my mind. And that'll affect the dollar. Even if they lower it 25 basis points, it's going to affect the dollar somewhat. And we're going to see a little pop in the price of gold and silver once that happens, you know. But they might go 50 basis points, which would see a bigger pop in the price of gold and silver. A bigger move upwards once the excitement actually starts to come back into the market for gold and silver, because gold and silver prices have been suppressed using the paper short contracts for so long that once we see a little bit of excitement coming back into the market, we see prices start to rise, we're going to see the excitement come back into the market, and that's going to increase sales of gold and silver. And that in turn increases prices, and it's a self-perpetuating cycle that can get going. They can see the price of gold and silver go up a lot from where they are now, and this is where we're going pretty soon, you know. But silver is such a dangerous market for the world's financial system, because there's such a tight, limited supply of silver. Most of the silver from mining every year, you know, is used in industry. Unlike gold, silver is used extensively in industry, and so they suck up most of the mining supply every year. If we get a huge uptick in the amount of bar and coin demand for silver, is such a tight supply on supply side for real physical silver. I've been waiting for this for a long time. I believe that a shortage is in the making. This crisis could exacerbate the shortage in the silver market. Of course, the shortage would be in silver that's available for sale. Now, I have to state that very clearly, that it's not an actual shortage in silver, because there's a lot of silver being stored in very strong hands. People that have silver, who've stored it away, you know, but that silver's not for sale. There's quite literally tons of silver out there, but it's not for sale. I'm talking about a shortage in the amount of silver that's available and ready for sale into the marketplace, most of which is provided by the miners. Of course, a shortage in silver would not last long. It would be ended when the price goes up to incentivize the people who are holding silver to sell it back into the marketplace. But at what would the price point have to be before they're incentivized, these people who are holding silver, to bring their silver in for sale? It would be considerably higher than it is now, I can tell you that right off. Now, this right here, I want you to take a look at this very carefully. This is Chinese auto sales. And you say, well, why does that matter, Chinese auto sales? Well, I'll tell you, I'm using it as an indicator. We can see that this red bar is the first, actually, they've passed the peak in their economy. This is an indicator for their entire economy. This basically shows exactly how much of a slowdown China is undergoing right now. And the entire GDP of China. This shows it right here. Probably about a 10% decline right now from where they were just in the last year or so. And we can see this all the way across the board in the Chinese economy. Chinese economy's dropped by like 10%. You know? And so how would this affect their GDP? Well, for crying out loud, the Chinese, they estimate their GDP. It's completely a bunch of rubbish. It has no basis in reality, them saying they have over 6% GDP. You know? What would that mean? That would mean in 15 years that they would double in size. Exponentially, they'd have to grow, and there'd have to be like 2 Chinas 15 years from now. I know they're not growing. In fact, they're shrinking. They are shrinking. And this is why their auto sales, which is what this chart shows the shrinkage. They are shrinking. You know, we got a lot of other stuff going on. You know, the Iranians, they've been pulling oil into China. Massive amounts of oil. They've been pulling it into China and parking it there because the Chinese are a little bit scared to do the deal and buy it. But it's allocated for sale. It's allocated for sale to China already. But they're just parking it there because Chinese are a little bit nervous. If they do the deal, they could be listed as breaking sanctions. So Chinese are sitting back there and saying, gee, you know, we've got all this oil here coming from Iran. What are we going to do with it? So it's sitting in ships and sitting in giant tanks. And it ain't going nowhere. And yet more continues to pour in. You know, millions and millions of barrels of this oil. What are they going to do with it all? Well, they risk infuriating the United States if they start to actually buy it and start to use it, I suppose. And so it's just piling up. This is a picture, guys.